Today in the grain market, soybeans were steady. That future trade is still sideways, and it's kind of been that way for a while. We're still inside that 50-cent channel, and some things to kind of take a look at right now. The Argentine Minister of Agriculture has suspended registration for exports for the oil and meal markets, and they're trying to adjust the prices. That's underpinning the soybean market as well. Plus, new crop commitments are the largest on record right now for this month, and it's even bigger than the last record that was set back in 2011. These kind of numbers, these all-time highs and all-time records are important, and we keep taking them out one by one. With the market the way it is, I expect that we're going to see this market is here to stay with a lot going on. The option open interest is still the largest at the $17, so I expect that we're going to continue to try to push up that way, especially that it was up 2,000 contracts just from Friday, and then now it's a total of 13,000 contracts. That's really significant to watch out for. Now, the CVAL for soybeans is 27%, the oil is 40.4%, and the meal is 32.8%, all very, very high for the soybean complex as a whole. Now, corn was a little lower today. I was kind of surprised, but perhaps, the traders are taking a little bit of a breather here. The futures do remain in the recent channel, but money managers have increased their longs to a 5-week high. So, kind of what gives with this market kind of just selling off. Perhaps it is a little bit of panic fatigue. Today's decline just seems to be the market just pulling back a little bit, because we wouldn't even call this a correction. The option open interest, though, is highest at the 680 strike and at the $7 strike with 12,500 and 10,000 respectively. Now we're right here at that 750 level, and we're about at 5,400 open interest. So the market almost wants to be pulled down somewhat just based on what options are, but that's not the whole story. So the CVOL is still very, very strong at 46.2%. Futures were down at 20 cents at one point. We were able to bounce back a little bit, but corn was just off a little to start this week. Wheat, it did firm up. Futures did, recover after a steep drop overnight. I think that says a lot for the market. An 80-cent range, that still is so high for volatility, but that's kind of what's happening, especially since the back months were a little bit lower. I thought that they were kind of sagging. So it could be that there's so many unknowns in the market right now. We're still kind of waiting to see what's going to happen next. Now, also one thing to think about is we're 1 week away from spring and just 2 weeks away from the acreage report at the end of this month. I mean, there's so many things in play right now. The option open interest on wheat on the May $12 calls is 3,500. So that's one thing to kind of look at. The CVOL is down a couple of percentage points to 77.6%, but that's still just hugely high for the market right now. The aggregate index fund, the net long positions across all three of the grains is the highest since 2011. I think that trader commitments say that the traders are really betting on higher prices across the board. So that's kind of the way everything is leaning at this point.